if you are hiring some technical service, then in this case you have to deduct TDS at the rate of 2%. Here also some issues arises because many of the payments are reported as professional fees, even though there is an employer or employee relationship. So one has to be very careful to ensure the compliance here. Only when 192 is not applicable, then only 194J will be applicable. Otherwise, the deductors has to ensure that they deduct TDS as per the section 192. Only if that section is not applicable, and then 194J has to be complied. Here also the finance bill has proposed one of the major changes. It is increasing the threshold to 50,000. Earlier it was 30,000 rupees. Now it is going to increase to 50,000 from 1,425. Next is section 194N. As our sir has said, almost all kind of transactions are attracting TDS. Even if you withdraw cash of certain threshold, then also TDS will be deducted from you. So one has to be very careful in withdrawing cash and avoid wherever withdrawal of cash possible. So the threshold R is if a withdrawal is more than 1 crore in a year, then TDS will be deducted at the rate of 2%. If the person is not filing any ITR, then the threshold becomes very less. It starts from 20 lakh rupees. So TDS will be deducted from if there is a more than 20 lakhs withdrawal of cash from the bank. So this is applicable, and this section is mostly enforced to reduce the cash transactions. Here also it is mostly applicable to not to banks, because banks can transact in cash, but for other than banks and certain government bodies and as enlisted, this section is applicable. Next, one more section is 194O. This is a recent section which has been in force from 2020. This section has been brought out to ensure that there is a lot of e-commerce transactions, and to reduce non-compliance among e-commerce operators. This section has been brought, and here also it says that if e-commerce operator is transacting more than threshold, then he has to deduct TDS at the rate of 1%. Here also the rate has been changed from 1st October 2024 to 0.1%. Next is 194Q. This is applicable to all of the deductors who are having more than 10 crores of turnover in a previous financial year. So here, if you are not deducting TDS under other sections, you are not deducting TDS under 194J, 194C, 194I, then you are purchasing goods of more than 50 lakh rupees, then TDS will be deducted under this section. So it doesn't matter what is the nature of the transaction. Here the section says that if you are purchasing a goods of more than 50 lakh rupees, then you have to deduct TDS at the rate of 0.1%. And here also there are some changes going to be brought out by the finance bill, which says that earlier there was a reference to the section 2061H, which talks about TCS on sales. So the reference has been omitted from 1/4/2025. And the important section is 194R, which deals with perquisites. Generally, many of the companies or many of the deductors are paying various kinds of perquisites to their employees, so as to give an incentive to employees. So they have to ensure that if they are giving any perquisites more than 20,000 rupees, then TDS has to be deducted at the rate of 10%. The perquisite need not be in cash. It can be in kind or in cash, or it can be partly in kind or cash. If you are giving some rent-free accommodation or rent-free accommodation or rent-free hotel stay to your employees without any business purpose, such kinds of transactions come under perquisites, and they have to be brought under 194R. And one more section is 194S. This is mostly applicable to the virtual currencies or virtual digital currencies. And here the 194S says that if there is certain transaction which cross certain threshold of 50,000 or 10,000 for others, the TDS has to be deducted under this section. and the TDS will be deducted at the rate of 1%. And one more important section has been introduced, that is 194T. 194T is many of the businesses here in around Hubli and other region are applicable for them. What happens, they are in generally partnership firms or limited liability firms. In those cases, if they are paying any remuneration or if they are paying any interest or commission, then TDS has to be deducted on such transaction if the payment is more than 20,000 rupees. So most of the firms which are coming has to comply with this provision from 1/4/2025. So please keep this in mind. And so we have already discussed what is TDS and what are the various provisions which we have to comply. So now we will look at what is TCS. So TDS is on purchases. So whenever you purchase certain nature of goods, then you have to comply with TDS provisions. Similar way, there is TCS. Suppose if you are selling certain kind of goods or services, then you have to deduct TCS. TCS provisions are mostly applicable for alcoholic liquor, then tendul use, or for timber, or if you are selling some scrap, or if you are selling some iron ore or lignite or coal. In such cases, TCS has to be complied. So general rates are, for alcohol it is 1%, for tendul use it is 5%, for timber it is 2.5%, and for scrap it is 1%, and for sale of iron ore it is 1%. Similarly, there is a TCS for availing service of giving service of parking lot, or for toll plaza, or for mining and quarry. Here also, if you are selling these kind of licenses or contracts of parking lot or toll plaza, mining or quarry, then TDS has to be rated at 2%. Then there is one more important section, 206C1F, and this is most of the purchasers of vehicle will be familiar with this. If they are purchasing some vehicle of more than 10 lakhs, then they have to pay TCS on that purchase of that vehicle. So here also the authorized dealer has to deduct TCS on the sale of vehicle of more than 10 lakh rupees, and he will collect TCS at the rate of 1% from such purchases. As I said, there is one more section, 206C1H. This section says that if you are selling any goods worth of more than 50 lakh rupees, then you have to collect TCS at the rate of 0.1%. And as per the new Finance Bill 2005, this section is going to be omitted from 1/4/25. And there is one more section, 206AB, TDS for non-filers. So as we discussed, so if you are not complying with the TDS provision, there is higher rate of TDS, or twice the rate of TDS, or at the rate of 5%, whichever is higher. So if the person is non-filer for the last 2 financial years, then in those cases the TDS will be deducted at the higher rate. So one has to be careful that the deductee is filer of TDS or not. Sorry, filer of ITR or not. Here also the Finance Bill proposes to omit the reference to these sections. And one more, this is applicable for TCS, where the person who is purchaser is non-filer. In those cases also higher rate of TCS will be applicable. Here also the rate is either twice the rate or 5%, whichever is higher. And here also the Finance Bill of 25 wants to omit this section. And we have discussed about TDS, TCS. Now we should know what are the date of compliance, because compliance is as important and it will reduce a lot of hardships to the deductors. So the moment you deduct TDS for that month, immediately by 7th of next month, you have to remit that TDS to the remit to the credit of the central government. And if it is by government deductors, the same day book entry has to be adjusted. And in case of last month, that is in the month of March, then you can remit by 30th of April. And one has to ensure that right statements are filed while complying with TDS provisions. The important statements are 24Q, 26Q, 27Q and 27EQ. 24Q has to be filed when there is a deduction under salary. 26Q has to be filed when there is a TDS deduction other than the salary. And 27Q will be applicable when you are paying to any non-residents. So this has to be complied. Whenever if you are paying to non-residents, you have to file under 27Q, not under 26Q or 24Q. And similarly for TCS also there is a separate statement which is 27EQ. So we should not club everything in the one statement of 26Q. You have to file a separate statement, 27Q for non-residents and 27EQ for TCS. So once you have deducted TDS, you have remitted TDS, but you are also responsible to issue the certificates, because certificates forms an important basis for the deductee to claim tax credits, and the deductors are responsible to issue the certificate on time. And one of the important aspects is 197. So generally many deductors come and say to us, sir, we don't have any taxable income. I don't want anybody to deduct TDS. So in those cases, if you are really don't have taxable income, then you can always file for a no deduction certificate under section 197. So if you are filing for a certificate, then it will be processed, and based on the merits, the certificates will be issued. And many of the times, what happens, the deductees don't have taxable income crossing the certain taxable threshold. In those cases, they have to issue the form 15G or 15H to the banks. So if you are issuing these forms to the banks within time, the banks will be not deducting TDS on interest payments. So please fill the right forms while submitting to the banks. If it is senior citizens, then you have to file under 15G. If it is for others, 15H. And as we discussed, TDS are stringent if you are not complying. So important aspect of TDS non-compliance for businesses is 40 AI disallowance. So whatever you spend, the 30% of that expenditure will be disallowed while calculating your taxable income. So to avoid this, compliance is important. And one more hardship is you are required to pay a TDS interest at the rate of 1% for non-deduction. So if you are not deducting TDS, then pay interest at 1% per month. If you are deducting TDS and you are not keeping that money with yourself and not remitting to the government, in those cases, then you are charged a much higher rate of interest, that is 1.5%. And there is fees for not filing the TDS statement also. If you are not filing the TDS statement on time, every day you are required to pay a fee of rupees 200, and this will be till the date you are filing the TDS statement. And these are interest and other consequence of disallowance. There is one more consequence, that is penalty. You are required to pay penalty for non-deduction of TDS. And if you are not deducting TDS, then the penalty equal to amount of the default will be levied on you under the section 271C. So this is apart from whatever interest you have paid or other fees you have paid. So this will be extra tax, extra liability you will have to bear on mind. And one more problem is 271CA, that is if you are defaulting on TCS payment, then you are penalized under this section. And similarly, if you are penalized for not filing the quarterly statement, or you are not issuing the certificate. So if you are not obtaining the TAN, then you are penalized for rupees 10,000. If you are not issuing the TDS certificates, then you are penalized to 500 per day. And apart from interest penalty, there is one more much harsher provision which talks about prosecution. So prosecution, you can be imprisoned from 3 months to 7 years. So if you are deducting TDS or collecting the TCS, but you are not remitting to the government account, then you will be liable for prosecution. So TDS provisions are comprehensive, and it has a harsher consequence if you are not complying. So prosecution is one of the much harsher consequence if you are not remitting the TDS collected to the credit of the government account. And one more aspect is, if the TDS is not done, but you have one alternative here. Suppose the person who you have paid, he is filing his ITR, he has included whatever you have paid in his return of income, and also he has paid the taxes. And also he is giving a certificate from CA certifying that I have reported my income in my ITR and I have also paid the taxes. Then in such cases, the lenient view can be taken on the deductor. But the deductor has to pay the interest on such default. So some of the very common errors faced by many of us is generally they get default in their TDS statement, mainly because they submit a wrong PAN. So wrong PAN leads to a lot of raising of demand, because the wrong PAN will lead to a calculation of a different TDS rate, either twice the rate or 20% or whichever is maximum will be calculated, and this will lead to unnecessary demand on the deductors. So deductors has to ensure that the PAN of the deductees are right, and these are also populated in the TDS statement. And sometimes wrong quotation of 197 certificate also leads to default, and one has to be careful in mentioning the certificate number so that the system calculates the certificate of that particular deductee. And one more is many of the banks are not submitting the form 15G, 15H properly, and this also leads to one of the defaults. And one of the short payment says it says that you are not remitted to the TDS to the government account. So what would be the major situation is, the challan number will be different, or there will be error in the challan number. Either the challan will be remitted to the different TAN, or there will be error in entering the details of the channel. So one has to ensure that the challan number and the TAN, everything are populated while you remit the TDS to the credit of the government. Many times what happens is, banks remit, if you are submitting to the bank on 7th of that month, the banks will have some technical error and remit it next day. So this will also create hardships to the deductors. So deductors are advised to remit the TDS within the month they have deducted the TDS. And as I said, there is a very, in case if you are making a payment to contractors, then you are confused whether I have to deduct at 1% or 2%. Here also the fourth letter, you can see the C stands for in the PAN for company, and F stands for firm, and P stands for individual, and H stands for HUF. So one has to mindful of this fourth letter of PAN and deduct TDS accordingly. If you are deducting TDS to the individual or HUF, then you have to see the fourth letter and deduct TDS at the rate of 1%. If the fourth letters are other than individual or HUF, you deduct at the rate of 2%. So these are basic aspects of TDS and TCS, and I have also discussed what are the consequences if you are not complying with the TDS or TCS provisions. And if any of you have any doubts regarding this, you are always welcome.
I have some doubts in remuneration to partner. When it comes to remuneration, the treatment is the two-way we are treating the remuneration. Once sometimes partners for year together they can't pay. Every month they draw the remuneration, and we account it as a drawing. And after financial year end, 31st March, we book the profit, and we whatever the portion remuneration has to go to partners, we shift it to their salaries or remuneration. Then now my question is, when we need to deduct the TDS?
So the 194T clearly says that if you are paying any salary, remuneration, even interest or commission, then you have to deduct TDS from 1,425 onwards. So it can be anything. It can be remuneration or salary or even commission or interest. So from 1,4 you start deducting TDS.
But in the beginning of the year, we are not able to ascertain what is the profit of our business.
Okay.
What is the percentage?
So actually it doesn't require to ascertain the profit at the beginning, because it just says that if you are paying any salary or remuneration, you deduct TDS.
But in the initial days, we don't show it as a remuneration.
But
We
you
show
show it properly.
That is wrong. But when it comes to practicality, if the partner is only dependent on the remuneration, how can he wait for a year together?
No. You need not wait for the year to complete. The moment you are paying any salary or remuneration, you start deducting TDS.
I will give you an example.
Okay. You are saying whether to deduct TDS on drawings or not.
Drawings, but later after the financial year end, it will be converted to their remuneration.
So that is not proper way. Either it
Proper
is
way of accounting.
Because in drawings it means that the partner's share is reducing. So there it is a drawing, just a drawing. But when you are paying a salary, it is separate aspect and it has to be taxed under TDS.
ಸರ್ ಇಲ್ಲಿ ಆಕ್ಚುಲಿ ಹೇಗಿದೆ ಅಂದ್ರೆ ಸಿಸ್ಟಮ್ ಪ್ರಾಸೆಸ್ ಒಳಗೆ ನಾವು ಅಕೌಂಟ್ಸ್ ಫೈನಲೈಸ್ ಮಾಡುವಾಗ ಎಂಡ್ ಆಫ್ ದ ಇಯರ್ ಪಾರ್ಟ್ನರ್ ಸ್ಯಾಲರಿ ಇಂಟ್ರೆಸ್ಟ್ ಎಲ್ಲ ಹಾಕ್ತಾ ಇದ್ವಿ. ಈಗ ಏನ್ ಬಂದಿದೆ ಆಸ್ ಪರ್ TDS ಈಗ ಮಂತ್ಲಿ ಟಾರ್ಗೆಟ್ಸ್ ಹಾಕ್ತಿದ್ರು, ಇಯರ್ ಎಂಡ್ ಪ್ರಾಫಿಟ್ ನೋಡ್ಕೊಂಡು ಆಸ್ ಪರ್ ದ ನಮ್ಮ ಸೆಕ್ಷನ್ ಪ್ರಕಾರ ನಾವು ಸ್ಯಾಲರಿ ಎಲ್ಲ ಹಾಕ್ತಾ ಇದ್ವಿ. ಈ ಕ್ವಶನ್ ಬರೋದು ಇವಾಗ ಫಸ್ಟ್ ಆಫ್ ಆಲ್ ಸ್ಯಾಲರಿ ನಾವು ಎಷ್ಟು ಹಾಕ್ಬೇಕು, ಎಷ್ಟು ಪ್ರಾಫಿಟ್, ಎಷ್ಟು ಡಿಕ್ಲೇರ್ ಮಾಡೋದು ಅನ್ನೋದು ಒಂದು ಕ್ವಶನ್. ಸೆಕೆಂಡ್ ಮಂತ್ಲಿ ಹೇಗೆ ಮಾಡ್ಬೇಕು ಅನ್ನೋದು ಒಂದು ಕ್ವಶನ್ ಎಲ್ಲರಿಗೂ ಬಂದಿದ್ದೀವಿ.
ಅದೇ ಈಗ ಆಲ್ರೆಡಿ explain ಮಾಡ್ದಂಗೆ, see drawings is different because in drawings you take the share of the partner, alwa?
Capital should come down.
Capital will come down in drawings. That is not applicable in drawings. It is only applicable if you are paying remuneration or salary. So if you are there is a drawdown of your share in the partnership firm.
One more issue is there. 40A 1A also will get attracted if you don't do it properly.
Whenever you drawings, it will reduce the share of that partner in that firm. So it is not an issue. Anybody has any issues?
In case of 194 asked, so is it restricted to only employees of business or business incentives also?
Business incentives also.
Yes. So,
Because if employees give a certain incentive, like he sponsored some foreign trip, or if he sponsored some business trip, or other than business trip, then in such cases you deduct TDS under 194R. Because there is no business sense or business exigency in that. So there is other than this business consideration, so you have to deduct TDS under 194R.
so in case of 194B, just I want to share my opinion. So because we are drawing in expectation of the remuneration, that is why it is better to deduct out of the drawings also, in my opinion. And also it needs some clarification, so we can have some circular from the CBDT in this regard. Yes.
Actually, the drawings is you are drawing from your share in the partnership fund.
So-
TDS is applicable only on salary and remuneration.
What happens, sir, we read that the income is earned evenly throughout the year, but only adjustment is made at the end of the year. So, in this regard, now we need some clarification from the CBDT.
We will definitely communicate to the.
See, actually what happens, what I can understand is that you consider it as a drawing in the initial. At the end of the financial year, you decide whether it should be accounted as drawing or remuneration, right?
Yes, afterwards, that's not the interest
So-
activity. That is why. we
So, see, the first of all, as sir also said, it's not a proper way of accounting, one thing. Because when you are drawing, you should be clear whether you are, that the nature of that payment is for remuneration or towards reduction in their share in the capital. That has to be decided at the time of making payment. If it is a drawing, then the question doesn't come. If it is paid in the nature of remuneration or salary, it has to be this one. So whatever practice that being followed till now, you have to change it. So that is what the Act expects.
Any incentives for women associations?
I am sorry, there is no specific certain exemptions in TDS.
Okay.
Like it is a society or what, like an
It's a
association?
society.
So you have for societies and all some deductions.
Yes,
That
sir.
will get applicable for your, if you are fitting into those
What is
conditions.
the percentage of TDS discount? Any? Yesterday we have placed one bill. They have deducted this TDS. Yesterday only. We have some high court orders. So it's a government order. Yesterday they have deducted. We don't have GST for the women association. So what is the percentage?
No, that is what you are asking, no, that is different. There is a purchase contract. Government
so
contract.
it's-
Contract with the government, it was gone into contract. Supply contract, supply contract.
It comes to
But the card is same in the name of practice. Because I'm running individual business, I'm running business association. That is what I have. Unless until I should get the mail copy, I have not received it. I'm waiting for the mail copy. It's a really, it's a very good product.
Any suggestions, please?
By policy making, you please put a word.
Please,
women
please put it.
association.
Okay, definitely, madam.
Yeah.
If you can give me a write-up.
Encouragement and support for women entrepreneurs during policy meeting.
Definitely, madam, that we will take it up. Please, if you can give me in writing,
Answer.
whatever you want to suggest, we will forward it to the government.
Yes.
And one more issue is that we can also get away with prosecution if you go for compounding. Earlier it used to be 5%, now it is 1.5%. If at all somebody has this prosecution notices or whatever, you can educate them that there is a this compounding available, so they can go for compounding, so that they will not be treated as SSC in default. Earlier it used to be, people used to think that whether I have done something wrong or something. Now a certificate will be given that he has paid the compounding and he is not a defaulter. So please avail that option also. And any good suggestions if you can give, because the income tax bill is coming and we have been asking a lot of suggestions from the public also. Any good suggestions if you can give?
The parameters of refund should be fast.
Already we have brought it down to 5 days, 1 week, and most of the refunds are coming within time, I think. Certain places there is an issue because the software, even 1 rupee or 2 rupees, if there is a difference, software throws a red flag and it gets delayed. So please see that whenever you are calculating your TDS and the refunds, do it properly so that these kind of, and also mismatch between the columns when you are filing the return. See that returns are filed properly so that there should not be a mismatch between the columns.
Sir, one suggestion. There are many arrears of start deductions. The start deductions in the earlier years, there are so many arrears of coming. So it may be due to the reason that the reasons means it may be quoting of wrong PAN and other things. These arrears are redundant in our opinion. And also the receivers of income, they have already filed the returns and they have paid the tax due on the return. That is a such type of arrears are to be waived in my opinion.
If you can give us the certificate from the statutory accountant that it has already been paid, definitely we will do it and we are ready to do it, and we also want to reduce the arrears.
And one more aspect is from 1/4/25, you can only correct for last 6 years. So after 1/4/25, you are not allowed to correct the statements you have filed for earlier years. So that also you have to keep in mind, and whatever correction you want to file, please file by 31st March.
With a proper certificate of chartered account.
Yes. And if you are, as our CIT sir has said, if there is already the tax paid is all that amount on that amount tax has been paid and ITR has been filed, then you can file on Form 26A. That will be accepted by the department.
Sir, till 31st of March 2025, till how many years we have to?
So from 1/4/25, you cannot correct your statement beyond 6 years.
The since 2016,
From 2019-20 on, only from 2019-20 onwards you can make the corrections. From 18-19 and earlier years, you are not allowed to do the corrections.
One more thing, sir. If a partner is having only income of remuneration, say about 25,000 per month, and his income will be around only 3 lakhs in a year, even then TDS has to be met, sir.
As per this section, it is clear that more than 20,000, if you are making the payment, you have to deduct TDS. Suppose that partner feels that I am not having taxable income, then he can file for one certificate, 197 certificate.
Certificate is sir.
It says that no TDS has to be deducted on such payments. Okay, thank you.
Sir, we can take any time to correction of that area, sir.
As of now, no, sir. We have to wait and see, but please do it if at all you have anything like that. By 31st March, please do it.
ಸರ್ ಒಳ್ಳೆ ಅಂದ್ರೆ ಕಡಿಮೆ ಟೈಮ್ದೊಳಗೆ ಹೋಗಿ ಟಿ ಡಿ ಎಸ್ ಪ್ರೊಸೀಜರ್ ಎಲ್ಲ ನಮಗೆ ಸರಿಯಾಗಿ ಎಕ್ಸ್ಪ್ಲೈನ್ ಮಾಡಿದ್ದಾರೆ. ಬಿಕಾಸ್ ಟಿ ಡಿ ಎಸ್ ಅಂದ್ರೆ ಏನು ರೇಟ್ಸ್ ಬಗ್ಗೆನೂ ಹೇಳಿದ್ದಾರೆ, ಪೆನಲ್ಟೀಸ್, ಪ್ರೊವಿಷನ್ಸ್. ಥ್ಯಾಂಕ್ ಯು ಸರ್, ಆನ್ ಬಿಹಾಫ್ ಆಫ್ ಆಲ್ ಅವರ್ ಟೀಮ್ ವಿ ಅಪ್ರಿಷಿಯೇಟ್ ಯುವರ್ presentation and thank you very much. Before concluding this, we would like to recognize our presence of our income tax officer, Srimati Trapti Norke. She is also the income tax officer in TDS department, Hubli. Madam, on behalf of all, we welcome you also. Would like to honor you on behalf of our Chamber of Commerce. Also, would like to recognize Inspector Sri Shukumar by giving a small moment to. I request Mr. Shukumar, please come and. I request Mr. Hemant Kaushik, please come and collect a moment. To conclude today's enlightening session, I invite Sri Ravin Pelgas, Honorable Secretary of Chamber of Commerce, to provide their vote of thanks.
On behalf of Karnataka Chamber of Commerce and Industry, I extend my heartfelt gratitude to who made this TDS awareness program successful. Our sincere thanks to Sri Satish Meriga, Commissioner of Income Tax, TDS Panaji, our chief guest, and our guest of honor, Ravindra Attali and Sri Kirti Amanna Nayak, for sharing their invaluable knowledge. And special thanks to Trupti Morje, Income Tax Officer, and we also thank Income Tax Officers present here. Special appreciation to our Taxation Committee led by Chartered Accountant Karthik Shetty and Chanveer Mungarwadi for organizing this enlightening session. We are grateful to all participants who have taken time to enhance their understanding of tax regulations. We thank we thank President and Secretary of Tax Practitioner Association. We thank you all for your participation and continued support. Thank you one and all. Height is our any